So guys, thanks for watching my video. Please like it if you get a chance at the bottom of the YouTube channel and comments below if you get a chance as well. I really enjoy the feedback. If you're seeing something that I'm not seeing, I really appreciate just give me a heads up in in the comments and we'll go from there. Bottom line is cycle-wise, we have a lot of downside risk in this market till mid-April, based on our cycle analysis. Now we have hit our potential downside target, uh, and it could bounce right here, but we did all that in a potential wave 3 down. So, as we can see, we are trying to make a little bit of lift in this market, but I want to point out you got VIX over 40, guys, so VIX over 40, you can have as normal operations of the market, a 2.5% up and down intraday moves in the markets, or better. So just be very mindful of that. When you get VIX this high, the rules have all changed. Uh, it's not until we can start getting volatility back under 28 that normalcy will start coming back into the markets, and we're at that point right here, right now. This is very abnormal on the VIX volatility. Uh, trying to say absolutely, yeah, we've hit a bottom. Boom, we're going to go higher. And all of a sudden we're up 2% on the day. As I told you, I was right. Well, guess what? An hour later, we could be down 2% because basically the VIX is so high. This is exactly what can happen in this market. All it takes is the wrong headline to hit the tape, and you're on the wrong side of the trade. So be very mindful of that. Okay. We do have a 3-year note auction today on the bonds. And I mentioned yesterday to be very mindful of the bond market. And we ended up having one of the biggest reversals on the 30-year treasuries uh, in history. It was massive yesterday. For one intraday move in the 30-year treasuries. It's unheard of to see something like that. So it turns out that the 30-year treasuries was a very fear-driven, crowded trade, and it reversed hard yesterday. And my video yesterday was timed perfect to be warning about the long end of the curve and the big risk that we are facing going into these auctions. So be very mindful of that going forward here. We got the 10-year auction tomorrow and the 30-year auction Thursday. So it's going to be really important to keep a close eye on these auctions as they manifest themselves as we go forward here. I do also want to point out yesterday we had the finance heads, the ECB, all the major countries. They all got together and they collaborated what they're actually going to do in reaction to Trump's tariff policies. So we may be facing a headline risk at some point today or tomorrow as the politicians weigh the uh, outcome of those discussions. So let's be very mindful of that. Might have some sort of retaliatory stuff coming out of Europe potentially here. So be very mindful of that. And like I said, the main reason yesterday in my video was to be very worried about these treasuries is we might see capitulation on the tariffs uh, out of Europe and the global community, and the cost for those capitulations to get the tariffs, you know, to uh, uh, to kowtow to Trump's demands is uh, a bond strike. Going into these auctions, we might start seeing a bond strike by the international community, driving up higher yields, and on the back end, the international community demanding higher yields to offset those tariff, uh, uh, any and all tariff uh, things that anything that they give up on the tariff side, they may want to try to get back on the long end, uh, in the treasuries. And it's the big, big risk to global markets. Because, I mean, just, very subtle interest rate increases on the long end of the curve, in our 10, 20, 30-year mortgages, this has major impacts on the house values. So we can actually start be going, with what Trump's doing here, this could be deflationary for housing prices if interest rates on the long end of the curve start really spiking. The international community demands higher yields on these bonds. And honestly, housing prices are way too high. I think they really need to come in. So, it's probably not a bad thing to have higher interest rates. And like I said, you know, uh, getting yields, these really low yields on like in these 30 years, these 30-year yields are just ridiculously low. Okay. And, so, you know, uh, it's just ridiculous that, I know personally, if I was a bank, there's no way that I would be um going out buying U.S. Treasuries at these extremely low yields, no realizing that a lot of the central banks have been holding these things 18, 20 years, and they're net flat to net negative on trillions of dollars. Why would you want to invest in that type of instrument? You're going to wait until, opportunities are better to be making that kind of investment into these equities. And that's one thing American exceptionalism has been very well, is because the global community is buying in to the U.S. debt, despite how much there is. They've been buying into the U.S. debt and keeping the yields very artificially suppressed. And there's a big chance that that's going to unwind given the tariff policies. So be very mindful of that. But I do want to point out here, I got the 50-day moving average on the 2 hour here. You see how we went from the upper Bollinger Band all the way down to the lower Bollinger Band in one day here on the ZBs. That's a pretty big move, okay, guys? So that was a pretty big move, one day move here for the ZBs. So be very mindful of that big reversal there. Now the trend is up. We're still making higher lows, so it's not in a really big jeopardy here. But I would be looking, really keeping a close eye on this and see if this uptrend line right here, see if by the end of these auctions, um, if we start violating. See right there, if you draw a trend line there, we're already trying to violate that. If we start trying to violate this uptrend in the ZBs uh, going forward here. So by the end of the week here, if we're trying to violate this to the downside, that's a big concern here. Uh, it's not the end of the world. We're not breaking lows, but it's something to definitely be mindful. You know, uh, going forward here in this market. Okay, and that does seem to be a very big. This is an engulfing rejection of these highs, uh, suggesting the international community didn't want to have anything to do with these higher highs, and they all are thinking the same thing I am in regards to the bond market. So be very mindful of that. I think this is very dangerous going forward here. Okay. So I'm not going to go into a whole lot of detail here, guys, but this is a one down, two relief rally, three down. Okay. And we typically looking for five waves in a pattern. And like I mentioned yesterday, that we're still lower here for the monthly 50-day moving average, and that's really our critical support. So we may be doing a wave 4 relief rally, and what's going to really show that up is we're going to start seeing divergences on the relief rally here. So be very mindful. Part of the reason we need this relief rally, volatility is way too high. So this relief rally actually brings volatility in, okay, allowing traders to put on some more hedges and stuff for a potential netter leg down. And our cycle time, like I said, mid-April, we should be hitting a bottoming cycle mid-April. So uh, we have to be very mindful of that. There is still a lot of risk that we still have not put in the final low here. And if we were to break lower, we're actually breaking a critical 2021 high. That was a prior swing high that we broke out of. And so we're really at a very critical support area that we bounced off of yesterday. Where's the yeses? Uh, yeah, okay. And our monthly 50 SMA is down here. Okay, okay. Uh, okay. SPX maybe. I had all these charts drawn out. I don't remember what I did with them. Okay, 1 second here. I drew it out here on the NQs. I'm sorry. But a similar situation here on the NQs. Okay, guys. So basically, what I'm looking at here this morning, we're on the weekly Bollinger Band low. We're back testing the weekly Bollinger Band low here on the Qs this morning. So be very mindful of that. We're doing a critical back test here of a Bollinger Band low, suggesting that we might have an overshot. So this is a very important decision point right here, right now, on the markets. We're currently trading right there. Uh, you know, uh, suggesting that this entire range could be invalid if this fails here. Okay, and like I said, our count suggests on the daily time frame that we may have another leg lower, and we shouldn't. So it's hard to say. I want to see how this bond market plays out as the week goes on here. I know there's a lot of traders that came in. They bought this because we are outside the weekly Bollinger Band here. They were buying the dip yesterday. I know a lot of traders were doing that. Congratulations to them if they are doing well here. Okay. As far as this morning goes, the pre-market action. 1 second here. So our pre-market volume here, NVIDIA is very active at this price point. And we were hearing some reports that people were coming in and they were buying NVIDIA. And that's another one that we came outside of the 50-day moving average Bollinger Band. And we are finding some buyers here. Okay. So be very mindful here. We are right above this prior high. So buy the dippers are trying to come in and buy the dip on the video. FXI, that's China. So we're at a very critical support area, potential support area here for our FXI. That's our Chinese names. It does look like we're going to have additional tariffs tomorrow hit on FXI. So be very mindful that there's a good chance that this is going to break in the overnight session coming into tomorrow. So be very mindful of that. Alibaba under pressure here. Okay. Okay, web. Not really seeing a lot of percent movements here on the volume. Okay, guys. So just be very mindful here as far as percent moves in the markets. How about net change? Let's do net change. The biggest net change to the downside. Apple has the biggest net change in the pre-market here. To the downside, we are still outside of this Bollinger Band. So be very mindful of that. Under a lot of pressure here. So we have the biggest downside pressure on Apple, Google, 150, trying to defend back inside the Bollinger Band. These are deeply oversold conditions for these names as well. So heads up on that. Gold under pressure, GLD. Extreme high coming back in, doing a back test on that one. See, on the bullish side, MSTR is the strongest today. MSTR is our strongest name today, of half a percentage point. Okay, a lot of people coming in around that magical 74,000 on Bitcoin yesterday and buying the dip on Bitcoin. A lot of people have been waiting for that 74,000. We came down, back tested these prior highs, prior high back rate. So we finally got the back test. There's a lot of people that, have actually started adding to the long side on Bitcoin. So be very mindful of that. That was a very critical back test that seems to be resolving to the upside. So be very mindful. A lot of people say, "Oh my God, I'm not buying this. Everything's falling apart." Well, yeah, this is a time when blood's in the street. Opportunists are out there looking to buy this stuff. Okay, Micron's finding a bid this morning. Still, see, 69. We're still outside of the Bollinger Band. Extremely oversold situation. Microsoft, outside, we were in a squeeze on Microsoft. It's broken down. 357. So, we still got a long ways just to get to the bottom of the Bollinger Band. This is not one that I personally would want to go long. It looks like this thing is probably going to resolve itself to the downside ultimately, especially if this market continues lower. We got the breakdown right there. We're looking 306, potential 306 here, in my opinion, on that. So be very careful on this one because we have that squeeze, Bollinger Band squeeze. The odds favor to the downside to finish that squeeze pattern. AMD, so we're getting a little bit of nibbling here in the semis. You can see what's SMH doing here. Similar situation. We got a squeeze breakdown here on the SMH, so we have to be very mindful of that. Yeah, this could very easily be resolving down to this area, so be very mindful of this. We got a really dangerous situation here on our semis. How's Amazon? Amazon's really been taking a hit on this too as well. So we have a head and shoulders. We're potentially putting in the low of the shoulder. So be mindful of that. We very good chance we'll be coming back up to the 197, 198 area here on Amazon for the right shoulder. Be very mindful of that one. Broadcom has a massive international exposure, massive head and shoulders. Up a little bit this morning, but we have come down to the neckline and we're bouncing off of it. So we're into the shoulder area. So it's not actually a broken pattern yet. And unlike some of these names like Apple, Microsoft, Amazon, Tesla, those are broken patterns. Those are broken head and shoulders patterns. Okay, no. See, with Tesla here on the shorter time frame, we're actually into this shoulder area or head and shoulder area. So this was the head, shoulder area is down here. So it's this one's not broken, but Apple and some of those others are broken. They've actually broken the head and shoulders on the shorter time frame. Okay, guys, so just be very mindful here. The cycle does suggest a lot of downside risk into the middle April, and it's hard to say what's going to happen once the earnings start flooding out. But the guidance from these companies or the comments about what's going on out of these companies that could once again really rattle these markets because the fear that we're seeing from the media, I think it's genuinely justified from the banks. And we got the banks starting Friday. Jamie Dimon's going to come out, and he's already pre-announced his worries about what's going on with all these tariffs, how they're going to trigger a recession. And it's just going to add more fuel to the fire if he's going to make more comments during the earnings call in that regard. Okay, so be very mindful of that. Okay, thanks a lot for listening, and I will see you trading. Bottom line is, it is a premium selling environment, so you want to be selling premium. Get this volatility back into the low 20s, and then you can start thinking about buying options again. I'm not buying any options. I did some premium selling yesterday. I made a few $100, and call it a day, but it is not a premium buyer's market. So be very mindful of that. Okay.